All right, Josh, we are live.
All right, guys, welcome to the Good News Real Estate channel, where we are going to be diving into a bunch of stuff today. And for those of you guys who don't know, John and me are real estate agents. I'm the real estate broker for Good News Realty Group, and then we have Tom on the show as well. So make sure that you leave your comments, questions below. Tom is on here. He is part owner of Fulcrum Home Loans, and he can answer any loan questions that we can't. So, but with that getting said, we have a lot to dive into. I'm excited. People are talking about how the demand, we're at the bottom, but we have a little bit of different take on that. So, John,
Yeah,
go ahead, take
definitely.
it over.
Yeah, if I can figure out this window here, it's with our information. Topics we're going to cover today. We have quite a few, so we're going to try and run through it. Mortgage Bankers Association is claiming that mortgage applications have decreased by 10%. We're going to talk about Fed rates, what's going on there, along with interest rates with Tom. We're going to talk about changes to Fannie and Freddie Mac with delayed mortgages and cash outs. We're going to talk about distressed mortgages, bad paper, and what's going on with foreclosures. We're going to talk about how banks are bracing for more consumers to fall behind the loans. And then we got some talking points. We're going to talk about the economy to see what's going on, and of course, some market reactions. So we'll jump right into that. Yeah, and you can go ahead and introduce Tom there, Josh.
Yeah, so we have Tom. He's part owner of Fulcrum Home Loans, and he's they're a mortgage broker. Maybe Tom can expand a little bit more on this, but they essentially work for 8 or 10 different investors that they sell their loans to. Is that right, Tom?
Yeah, so we've got about 15 banks that want our business, which is kind of unique, as we can find cool solutions to just about every borrower and their needs, whether it's non-QM or QM. It just gives us the ability to help more buyers get into homes.
Awesome. All right, so let's jump into it. And if you're just joining us, please like this and leave us a comment with any questions that you may have.
Definitely, and I'll jump right into it. Mortgage applications decreased in latest MBA weekly survey. So we've been showing this the last couple live streams how I think last week they were up 37%, Josh, and now they're back down to 9%, saying mortgage applications decreased 9% from 1 week earlier, according to the data from the Mortgage Bankers Association. Weekly mortgage applications have dropped since ending January 27th. So just want to get some thoughts on that and kind of what you're seeing, Tom, and if everybody else is seeing that. And this is obviously nationwide as well.
Yeah,
but
I'll let Tom go first, and then I'll share my thoughts.
Yeah, I mean, first off, November, December was the kind of the very bottom. That's when we saw applications at the slowest we've seen in years. It was kind of right around January 8th is when applications started ticking back up. And like you said, it was like a 30% increase. I know over here, we've seen probably about a 50 to 60% increase over the last month, where buyers are starting to see a little bit of stability in the market and trying to see what they can qualify for. So over the last month, we've been pretty steady with an increase in applications.
Awesome. Thanks for sharing that. And I think so. Something I would just want to bring up here too is because there's a lot of agents that are saying that we're at the bottom, and nobody knows if we're at the bottom or if we're on our way down or if we're on our way up. But something that I want to point out here is it still says that we're 40% under from this same time a year ago. And so, buyer demand isn't fully in full force yet. And we're going to see that here in a little bit. We have a couple graphs that we pulled out. Not graphs, but we're looking at last year's data year over year. And this is before BR sends their stuff out. Their stuff will be sent out here, and probably by the end of next week, where we do our normal housing market updates. So if you don't follow us, make sure you subscribe and you'll get notification on that. But this is just I just want to show the buyer demand a little bit. Is the buyer demand, as we can see, our pending sales, and this is as of today, probably about 20 minutes before this video, our pendings are about 1,012 for the month of January. And so it's showing that we're still down 334 pending sales. And what's fascinating to me is Ada County has that this will be a third year, assuming that BR comes out and their stats are the same. This is going to be the third year where they drop in a row. And so, I don't know. It's kind of interesting to me. We're down 25%. But Tom, you are saying that you're seeing a higher application. Is this company wide or is this just you?
Yeah, this is company wide. I mean, and we could touch a little bit when we start talking about the Fed, but looking at the data on our end, and I think there's outside influences that aren't really being factored in yet. But when you kind of mentioned the bottom, what we saw was, because Idaho is still heavy new construction. And what we were seeing is in November and December, especially with the builders, they were offering 20, 30, 40 grand in seller credits. They were lowering prices. Right about the time we started seeing an uptick in applications was the same time we were seeing a lot of the builders decreasing the amount of seller concessions that they were going to give. So instead of giving away 30, they were giving away 5 to 10. And we were also starting to see a little bit more of like, hey, there's 2 offers on this property. We've got to figure out what deal we're going to accept.
Yeah. Yeah, absolutely. I would agree that I have seen a little bit of that where builders are like, okay, we were dropping a bunch. We had a handful of people reach out just this last week about CBH. Hey, we saw your last video. What's CBH doing? Some of them were already represented. Some of them were just agents that reached out and asked us those questions. And we saw them change, right? They've moved since our very first foreclosure wave video to now. We've seen them move about 200 active homes, right? So they put more homes on the market, but their currently listing has dropped, so they've definitely been moving inventory, which has slowed their motivation to give away houses.
And we can get into the new builders too. And before we move on this, I just kind of want to bring something. The reason we bring this kind of data up right here is because there's so much information people are being bombarded with on YouTube or Facebook or, mom, brother, sister, everybody's saying something different. So this is just real life data from today. I mean, 1012 compared to 1346 from this time last year. It's just, we do it on a daily basis. So it's so hard to track the actual information people are saying. So we just want to be upfront and honest with you on that.
Yeah.
So I will move to the new construction. Josh, you can run with that.
Yeah. So we want to break down new construction kind of along the lines of what you said, Tom, or at least bringing up new construction. So new construction, we're still down as far as our pending sales go. We don't have our sold sales. We won't see those again for about another week, but we see our pending sales were right under 600 last year, this same time we were at 850. So we've seen a decrease as well. That's about a 30% decrease in new construction in Ada County for pending sales. And I think part of that, I think where we're seeing a lot of activity move is that under 500,000. Now, what would you, and I don't know if you can share any of that information, Tom, but what would you say is a lot of the buyer activity? What are their purchase prices going in, that kind of stuff that you're seeing?
Yeah. So new construction, we're seeing that under 500, which was way different than, like you said, this time last year. Resale, we're still anywhere from 6 to 750, somewhere around there on resale homes.
Yeah. Yeah. And I think maybe you can agree with this, Tom. I think resale homes, at least those who have been marketing it for a while, they're a little bit more encouraged to give incentives. Would you agree or disagree with that? What you're seeing on?
Definitely. I mean, and you're still seeing homes on market a lot longer than you were, a little while back. So I agree with that.
Yeah.
So Josh, I want to kind of bring something up. So when you see all this traffic online about people saying that the market's returning back to normal, everything's great, everything's good.
Yeah.
I mean, everybody should buy. I mean, not saying people should invest in real estate. And I mean, we're all in the industry, but I mean, why do you think that is?
Well, before I answer that question, I want to ask the audience, why do you guys think the market's changed? And if you do, please share, or why do you think it's shared? Yeah. And then I think it's just with caution, right? We are still helping clients relocate to this area, right? We're still helping clients here in our market that are making sideways moves or just getting into a house. So we're obviously helping people, but we're always telling them be cautious. Be cautious. Don't just jump into anything. Don't get emotional, and make sure we're crossing our T's, dotting our I's, and being patient when moving forward on a house. So I would disagree with all the agents that are saying, man, we've hit the bottom. I don't know, right? I don't have a crystal ball, but based off of what we're seeing here, and even we're going to look at Canyon County, is our pending sales are still down year over year. And so we do have more activity, but crazy thing is our inventory, which we didn't bring up any inventory. We're going to wait till BRR or Boise Regional Realtors comes out with their stats, and we'll do our normal video there. But our inventory's up. Our inventory's up a lot higher than it was. And then even in these graphs here, and we're going to see that here next week, but our pendings are still down. And so, yes, I agree that we're seeing activity, and especially when there's some houses that are priced well below market value that will get multiple offers on it. I mean, I still invest in real estate right now. We haven't found any properties. There's been a couple that I've seen that were priced so low, but then they get driven up because it's like people think it's such a good deal, and then it gets bid up to where it's not a good deal anymore. So did that answer your question, John?
Yeah, it did. Yeah. Definitely. And I'll get some of these comments real quick. We got a heart from Lucy on Facebook, which first time we've seen a Facebook comment come through. So that's pretty cool.
Yeah.
I'll throw that up there. And then Johnny Moline here is really concerned about the 0.25% interest rate hike yesterday. We're going to kind of get into that, but I guess, Tom, you can kind of expound on the concern there real quick, kind of let them know what's going on.
Yeah. So the rate hike yesterday was already anticipated, right? They already came out and said they're likely going to do 125 basis points over the year. And we can get into this more later, but as far as mortgage interest rates go, our market actually looks stable because they raised it 25 basis points based on the fact that that's what they said they were going to do. So, when you look at the mortgage-backed securities in the bond market, it kind of looks like things are stable and things are getting back to normal a little bit. So our rates actually decreased on the news from yesterday.
Right. And that's kind of why I bring this up. I mean, I know with the 0.25% going up, the Federal Reserve just coming out, and obviously we're not talking mortgage rates here. We're talking Federal Reserve rates. They're declaring premature victory on inflation. And I say they're going to continue to raise those rates as well. The Federal Reserve raised rates by 25 basis points like we were just talking about, as widely expected. The Federal Reserve chair held a news conference yesterday, which we all watched, and saying that it's premature to declare a victory against inflation, which I agree. I mean, I harp on all these videos. I don't think inflation is being tamed. I mean, we could disagree on that. I'm not sure if you agree or not, but I think things are completely out of control along with cost of living. But any thoughts on that?
No, I'm 100% behind that. I mean, I think that some of the data that comes out is kind of showing that inflation is getting under control a little bit. I think there's a lot of stuff in there that, we keep printing money. At the end of the day, you can't control inflation if there's
right.
Right. So
yeah. And I think the number just ticked up by saying that I think they said yesterday, like 45% of all the money that's ever been created is in the last year or last 2 years. Correct. So we have a major problem.
Yeah.
Headed that way.
Yeah. And I guess we're going to go into Jerome Powell and what he talked about in that press conference. I mean, he did talk about how they're staying course. They're still planning on doing more rate increases. And well,
just continuing the article, I mean, they say we've raised rates 4.5 percentage points, and we're talking about a couple more rate hikes here to a level that's appropriately restrictive. Why is that necessary? I mean, they're still saying inflation is very high. So there's a lot of conflicting information. Inflation's cured, inflation's not. I mean, I guess it's whoever you're listening to, but I think the consumers on the ground realize that it's not tamed. But some people could disagree. But it's the way I feel.
And something that he warned about, and there are other people that are warning about, that is if he U-turns too fast or too quick, then it's going to jump into another inflationary market. And when money gets cheap, and the Fed fund rate really affects mainly HELOCs, car loans, short-term lending.
Yep. And
if that stuff starts going back down, then we're going to see probably an increase in those kind of demands as well as, so I don't know. He came out and said that he's staying course, but we always have to keep in the back of our mind that, he did flip-flop back in 2019, I believe it was. So we always have to keep that in the back of our mind.
And kind of bringing that up, Tom, you sent us some slides where we can kind of talk about the situation you have right now.
Yeah. So, and you guys kind of already touched on that, is the big myth of like, the Fed's raising rates, mortgage interest rates are going to be affected. And so like we kind of touched, we do have a poll based on what the Fed does, but it's not a direct effect. So you kind of already touched on that. Things like HELOCs, car loans, your credit cards, all of those things are directly impacted with where the Fed rate is. So that, the Fed rate is roughly 4.5% right now. Most HELOCs are going to be prime rate plus 3% above that. So people who got HELOCs back, in 2020 when the Fed rate was 0 and they were paying 3% on it, that was a pretty good deal. Now they're paying 8% on it, and it's a much different payment.
Well, kind of not to cut you off here, but kind of talking about, I think that's what people don't realize is how much it affects even like credit cards. Because, obviously we know that, U.S. credit card usage is at an all-time high and the
Right.
debt limit's all-time high, but I don't think people realize that those interest rates are variable when they sign up for those. And because
like HELOCs are not necessarily car loans or credit cards, but HELOCs. Yeah.
HELOCs too, but like their credit cards, it starts at 7, now it could be at 20% depending on what the Fed's doing.
Right.
It's skyrocketing. It's pretty insane to see. And did you want to talk about
But the good news is, John?
What's that?
The good news is CDs are really nice. You can get a 5% CD, 6% CD. So come on. Do
you really think that keeps up with inflation?
It doesn't keep up with inflation, but it's better than the 1% CDs we saw last year or something. So
like more like at 0.2,
0.5.
Yeah,
so
something like that.
So there is good news behind that, at least.
Tom, do you want to touch on this chart here?
Yeah, so this chart just kind of shows you the Fed rate over the last 55 years. And the important thing to see, there's kind of the spike in the 80s. That's when interest rates were through the roof, right? But there's a pretty huge difference between where the Fed rate was back then, and if you look at the last 20 years. And the major part of that is back in the 80s, early 90s, there was 5 major players that got to see what the Fed was doing and got to participate in what the Fed was doing. And the rest of us were just kind of along for the ride. And now you've got things like Robinhood, you've got things like, brokerage accounts, things like that, where everybody becomes a player. So when you look at the Fed rate, it's kind of important. You really, for the most accurate details, you want to look at about the last 20, 23 years, because that's when things kind of shifted from, the 5 major players to where everyone kind of has a say in it. So when you look at where, when people start talking about, well, my house rate was 15, 16%, 40 years ago, that's not, you're not going to get the same data as you look at it today. So if you want to look at what the Fed rate's been doing, the most accurate is to look at, roughly the last 20 years. And so when you look at the last 20 years, you see where we are currently is not abnormal.
Right. And then kind of bringing up the next slide too. You can expound on that.
Yeah. So this one was the Fed rate versus the mortgage rates. And so you see that we do follow it, but it's not a perfect chart where we're going to the same valleys and the same peaks. But this just kind of shows you where interest rates were when you reflect it next to the Fed rate.
Yeah.
Right.
So Tom, can I ask Tom a question on this?
Yeah.
So something that I found fascinating is, and so I just want to know your thoughts. I probably should have told you I was going to ask you this question before I did, but it just came to mind. Sorry, Tom, you couldn't do your research on it. But I found it interesting that in 2007 to 2008, late 2008, the Fed fund rate dropped almost 500 basis points. And it didn't protect us from going into recession. What are your thoughts on that?
When you look back at that, there's so many contributing factors. You had bad lending practices. You had people taking advantage of colluding with appraisers and stuff like that. There was so much bad paper, which we could talk about later when we talk about delinquent loans and where things are there. You were buying a house and you don't know one day to the next if you're losing 50 grand or 100 grand in equity. That it didn't have as much to do with interest rates as just an unstable market.
Are we kind of there though right now? If people are still concerned day by day, how much interest they're going to be losing, or not interest, sorry, how much value they're going to be losing on their property right now. Especially people who bought 21 to current. Their values potentially are dropping.
I think that's the unfortunate thing is anyone who bought kind of late 2021, early 22, they're feeling it right now. So I heard somebody say we're not going to be 2008, but this is a cousin. They're related. You know that there's some similarity there, but it's not. They're not brother sisters kind of a thing.
Okay. Okay.
You got anything on that, Josh?
No, I just want to hear kind of your thoughts on it, and that's kind of. I saw we have a couple questions.
Tom,
so
are
let's
you
not-
allowed to talk about current interest rates right now, or do you have to have an APR chart up, or can you kind of
No, I can give you, what Fannie and Freddie, this was as of last week. So Fannie and Freddie roughly was the average national average interest rate being offered was 6.33%. And now when you look at that, it's important to know that the national average is with including 1 point. So that would mean that 6.33% interest rate that everyone's been talking about. For most banks, that's including 1 point. So that's a $5,000 charge, $7,000 charge, depending on the loan balance.
Which I don't think a lot of people understand. I mean, obviously, that's why we like local lenders, because you can educate people on that. When they use big banks, people don't understand that. I mean, is that wrapped up in closing cost, essentially, to buy that down? So really, it would be closer to 7.25 if they didn't have that 5,000 down.
Probably 6.25. Yeah. So, and that's why we've almost started pivoting, because we don't charge, not to talk about my company too much, but we don't charge origination fees and things like that. So we've had to pivot to where we used to just say, hey, here's our no cost point. Well, they're getting quotes from banks where they think it's also the same quote. And so we've had to say, like, hey, here's the national average 1 point quote. And then here's, if you want, lower closing costs, this is what it looks like.
Yeah. And I kind of, not trying to drag this one out, but I think it's important for people to understand is when they go into something like that and they're looking at their interest rates, knowing the difference, how to buy things down. I mean, if they're going to stay in the house for 15 years, buying it down might be worth it. But if they're only going to be there for a year to two, they really got to do the math on that. Obviously, they turn to you for the expert on that. But I mean, that can get pretty costly to buy things down, correct?
Yeah, we've got like a formula here because the national average is like 3.5 years that people keep their mortgage. And now we've got rates, people who've got homes with, 2.5%, 3% interest rates. So I think that number might change a bit. But the average person is refinancing, trying to take cash out, selling and upgrading.
Currently?
Those aren't happening. The refis aren't happening right now. But just in general, that's why people their loans for more than 3.5 years. So when we talk to someone about a buy down, that's, hey, it's going to take you this many months to even out, the buy down, and likelihood. What is your goal? Like, are you going to be in this house for 60 months, for 5 years, 10 years? What is your goal? Because if this isn't your forever home, it might not be worth a massive buy down unless the seller's paying for it.
Yeah. Not trying to drag that out, Josh. I just thought it was important for
I
people
think it's
to understand.
good. I do think it's good to know that you can buy down your interest rate, how you do it. And I appreciate, Tom, that you walk people through like, hey, you can buy it down. It's going to cost this much, but if you only keep it for 3 years, then it may not be worth it. So I appreciate that. I'm
going to throw up a question here real quick too, before we get too far ahead, from IRSQ Pets. Does any new construction not have HOAs? So I've seen this question actually quite a bit, Josh. I mean, there's been several videos on YouTube, people asking about HOAs. Can you kind of talk about that a little bit?
Yeah. So the only new construction that we see that doesn't have HOAs are maybe a small infill project that's like, hey, we're cutting off a lot from a house, and that lot's obviously not going to have a HOA sometimes. And then the other non-HOAs is, if you go out and you find a piece of dirt and you build on it. But for the big developments, and what I mean by big developments, I'd probably say anything that's like 20 homes or more, it's going to be pretty unlikely that there's not going to have an HOA. So yeah, to get around the HOA, you'd have to find some dirt, or maybe find a house in an older neighborhood that you can subdivide, build on it.
Or you can tear the house down
or tear the house down.
Build a new house in there with some acreage.
When the market was crazy good, people were paying too much money for a house. They'd scrape the house and then build on it because there's the equity in it. So
I just think some people just like to complain, so they keep HOAs and CCRs in place to try and keep people happy. I just think it causes more chaos. So good question on that. Thanks for answering that. I have another question up here too from the Brave movement. My wife and I are looking to move this summer. We are fine to rent for 6-12 months if we can't find what we're looking for. Do you predict rental prices to still be low and negotiate by then?
And negotiable by then. I'll answer that, and then if any of you guys want to touch on it, Tom, I know you have rental property, so you might be able to shed some light on this. So I think if the market continues in the direction that it's going now, in the direction that I believe that it's going, not what other people are saying, right? We have people out there that are saying, man, we've hit rock bottom. It's turning around. We're back into multiple offers and that kind of stuff. I don't really believe that we're in a buyer frenzy market still. Our inventory is, way higher than it was last year, and our pendings are still lower. So as long as that trajectory continues and the buyer demand stays lower year over year and our sales stay lower and our inventory increases year over year, I think some people are trying to convert their homes that can't sell, that are sitting vacant, into rentals. So as long as that happens, and then we have a bunch of multifamily that's coming on the market that's not currently listed. The last time we looked, there was about 3,100 apartments or single family homes listed for rent. So if that number increases, then yes, I think that it's going to be more negotiable. And some people are, if you haven't seen our video, we did a video where somebody was able to negotiate $200 off their monthly rent. And that was, that's including the landlord trying to increase it. So as long as the inventory continues to increase, then yes, I think so. We don't have a crystal ball. So full disclosure, I accidentally broke mine. Actually, I was never given one, but yeah, I think with that being said, if our trajectory continues to go in the direction it's going, rental prices are still going to be negotiable. I think
we're seeing quite a bit come down right now. I mean, I've talked to a lot of people. Our rents are coming down. I mean, some do increase in some areas, obviously, but quite a bit. And I'm curious to say, when you say move by the summer, do you live here now, or are you just thinking about moving to the state? If you let us know on that, and what area you're moving to as well. That might be help a little bit on that. And I'll catch up with some questions here. So
let's let Tom. Tom, do you want to share anything on that as far as what you think the rental prices are going to do?
No, I've seen this same thing. We do a lot of primary conversions. So people who own homes with a small interest rate from the past couple of years who want to upgrade homes, we get them into a new home and teach them how to turn their old primary into a rental. We're still seeing them being rented out really quickly, but not getting the numbers that some of the property management companies were telling them, like, hey, this is going to rent for this much. And, when it comes in, it gets rented quickly, but just not for quite as much as what was being promised.
Yep.
Yeah, and I don't actually have the information with me, but I know I've read a lot of articles about big stock portfolios that own massive amount of rental homes are selling like crazy right now, trying to recoup their cost of purchasing, and they cannot return the investment. So maybe that's something we can bring on next time to kind of show you, because I think that's going to be a big bubble effect, because we do have a few iBuyers in the area that have purchased quite a few properties. What was our last video, Josh? I mean, how many properties do they own in the valley?
Were we talking about Open Door here?
Yeah,
Open Door. They had like 50.
That's without 40 to 70 or something
56 like that. Homes, and they were almost every house that they had, they were selling for a loss.
Yeah. But we do appreciate the comment as well in there. And then we have some conversation going between Johnny and Sean. I think let me pull this comment up right here. Try to read this comment right now. I think the market changed. Number one, interest rates, and two, the virus. People are scared. Well, now we're going to get a shadow banned on YouTube for saying that word, but that's okay. So, anyways, I think what he's trying to say is there's people are scared of the interest rates, and then obviously, when the pandemic came screaming through, a lot of people got panicked as well. So I think we're seeing these waves right now of people that were in a panicked market. I know you bought a house during 2020, correct, Josh?
Yeah.
When everything was going down, you still bought. And now we just have these ebbs and flows up and down, what's going on. But I think they're just ending the coronavirus mandate. I believe this month they're talking about it right now. It's all over the place.
Yeah. I'm going to stay out of that one. It's just a hot topic, and I don't want to get shadow banned on YouTube.
Yeah.
So let's keep that virus stuff out.
Yeah. You got anything on that, Tom? Or, are you seeing the flow of people scared originally when it started? I mean, we don't necessarily talk about the virus, but I mean, obviously people being scared and the panic, buying, selling, and then kind of creating chaos on this market.
Yeah, that's slowed down. I think we're going to keep getting people that want to come here for all the things Idaho, has to offer.
Oh, of course.
But the panic buying is definitely not, it's definitely slowed down.
Yeah, there's no other state I'd rather be in. So
yeah.
Let's see if I catch up with a few here.
Let's put up Better Call Saul. We'll let Sean and Johnny talk things through a little bit.
It's from Better Call Saul. Hello, my wife and I are in a unique situation. We pay low rent for a 3-bedroom home, and we've been wanting to purchase a home. We're willing to wait as long as possible. When should we purchase? So kind of just before we let you guys go with this, Josh, we've been talking about this a lot, how people want to know when the bottom's at, right? And actually we're going to do a video on that. We're actually making a video. When is the bottom?
Yeah.
Obviously nobody knows, but this is a great question. I'll let you run with it.
Yeah. Tom, do you want to jump on it before I respond to Better Call Saul?
Yeah. So we kind of touched on it earlier. Some of the data would suggest November, December, right? Because that's when applications were low, and that's when massive, price cuts and concessions were coming in, and we've seen that kind of go away. Now, do I think that, we also talked about how we're still printing massive amounts of money. So do I think that is the bottom? I think it's too hard to say. I know that we've leveled out and stabilized a bit, but there's nothing to say that when some of the unemployment numbers and stuff come out in the coming months that we can't go back down.
Yeah. Yeah. So I think you guys are in a great situation. Better Call Saul. One, if you're paying low rent,
It's a good show, by the way, if you guys haven't watched it.
if you guys are paying low rent, you can't beat that. And we're currently working on data for another video. So we have a couple videos that are currently in the works. We're just wanting to make sure we get the data together for them. But one of them is we're comparing the rents in our area versus purchasing that same home. And I think just being ready, because we don't know when the bottom is, right? But if you can be ready and just watch, sit back and watch, and if that house that's like, oh my gosh, this checks all the boxes, then I think maybe jump on it. But when I mean all the boxes, it's got to be like 9 out of 10, maybe 10 out of 10. But that's what I would.
Well, I kind of like, I know you had a conversation today with somebody who called you about the same topic.
Yeah.
And I kind of like how you're explaining to them. I don't want to sound cliche here, but it's what works for you. And it's dependent on your situation. Yeah. I mean, if you have to be here and you have to move here and it's job related or family related and you just want to get out in their state to come to Idaho, you're going to make it happen. I mean, you're going to make it happen.
Yeah.
I mean, nobody knows how low it's going to go. But Tom, I agree with what you're saying. I mean, cost of living, inflation, everything going on is it's just killing everybody. And everybody's so panicked right now to purchase because they're not sure how much value they're going to lose on it.
But there is something to say about having a low rent. I mean, if your monthly overhead is so low and you don't have to move, I mean, there's something to be said about that. So I'll just use my personal example. Better Call Saul. We are looking at moving again, possibly, maybe. Don't hate me, Jonathan.
Again? Oh my gosh!
Don't hate
Thanks for
me.
announcing it right here. Yeah, perfect.
So, but we are very patient and we're waiting because our mortgage is reasonable and we aren't just going to want to pick up and move and settle, right? The only thing that's going to get us to move is if it's crosses all the boxes that we want. So, that'd be my little 2 cents.
I just got one more on that. I mean, obviously, as you know, when you rent, I mean, I think when you rent or buy, you have power on both sides. When you rent, you're able to move, do what you want, be quick, reactive.
Freedom.
Yeah, but at the same time, you still got to find a place. But you're also under the thumb of somebody that owns that property, so hopefully you have a good landlord. But buying at the same time, I mean, you can, as long as you're good in that situation, you're comfortable with it. You have ultimate power to do what you want, as long as you pay your property taxes, or the state will take it. So, yeah.
Oh,
you guys
be disciplined if you've got that low rent. If rent could be higher or your mortgage payment would be higher, put that money away, pay off debt. Be diligent and grateful for that low rent. But yeah,
I want you to touch on something, Tom. So Better Call Saul, if you are a first time home buyer, there is a savings account that you can open up and put money into that you can use that, right? It's some kind of weird tax thing. Am I right, Tom? Maybe I'm wrong.
Yeah, they're trying to think of what it's called, but yeah, you can basically help save for your down payment that way. I know a lot of banks you can open it there, and I'm having a hard time remembering what it's called, but yeah, that is an option.
We'll put the links up after the video. So
yeah, we'll put links up. Better Call Saul. So if you are a first time home buyer, I believe there's tax strategy in this savings account, right? Is that right?
Correct.
Yeah. So we'll put some links up in the description. So if you are a first time home buyer, whether you are Better Call Saul or not, at least you'll have it. And anybody who's watching.
I saw your follow-up question. My father-in-law is a landlord.
Solid.
I mean, that's a pretty good price right now. I'm not sure.
That's I would have a hard time moving unless it was like perfect.
Exactly. Another question from Johnny Fly. Who's the best home builder around the Boise area?
Okay, Johnny Fly, before we answer this, I just want to let our audience know we have about 10 more minutes with Tom. So if you have any more questions, lender directed, please comment them. And if you haven't liked this video, we really appreciate it.
Yeah.
But yeah, we have about 10 to 15 minutes.
I'll put this
Tom.
comment down. We'll bring it back up. I'm going to go through this PowerPoint so you get through it, Tom. And then
Well, okay. All right, Johnny, we haven't forgotten about you. We'll come right back
we'll put
to
it right back up. Just want to continue with this. Any comments you want to talk about, Tom? The Fed moving ahead, looking ahead, what's going on, or your predictions of what might happen?
Yeah, so you can see there on the slide, the Congress said your job is to stabilize, prices throughout the country, AKA keep inflation under control and maximize employment. We also talked about the contradictions that they make. They've also said they wanted to see low employment numbers so that, we could be in a recession, and that would also help inflation. So there's lots of contradictions there. But their goal there with raising these interest rates is to theoretically curb inflation and start to stabilizing, so we're not paying $12 for a carton of eggs.
But we still are. So
unless you have chickens.
Yeah, definitely.
Unless you have chickens.
And I know you wanted to touch on what's going on with Fannie Mae and Freddie Mac. They had some changes. You can obviously, you're the expert on that. You can explain what's going on, because I think it's very important for people to understand. So
yeah, the big ones are cash out refis. They are making it more challenging to get some of the equity out of your house. So traditionally, any loan that you have, you've got to be in it for 6 months, and then you can refinance, or you can take cash out refi and take cash out. Some of the major, they haven't come out with all of, I think it's May 7th that this starts. So they haven't come out with all of the details yet, but they're going to make it where you have to wait 12 months to do a cash out refinance. And there'll be some further guidelines on that. It's just going to make it more challenging to get the equity out of your house. And they've also made, last year they increased the pricing on refinances, and particularly cash out refinances, making it just more challenging to make it worth it. Not only if you do a cash out are you having a bigger loan, but now the rate's going to be a lot higher than it was when you purchased the house.
why are they doing this? And I have two questions for why are they doing this, and also does that affect the VA loan?
And the streamlined FHA
Correct
refi.
So any kind of rate and term, so the VA IRRRL or the interest rate reduction loan, none of that will change. So that'll still. So the VA was already at 7 months from first payment. So none of that will change. But the cash out portion on conventional lending is where it's going to be, where you're going to feel this.
So I think the people who are going to get hit the hardest by this are the people who are doing like the BR, the BRRRR strategy: buy, rehab, rent, refinance. Those are the ones that are going to get hit the hardest, right? So if somebody's in the middle of a project, when has this already passed, or is this going to come?
Freddie has kind of already come out with what they're going to do, and Fannie's going to probably be in a week or so. They'll come out. The date is like May 7th. So you're going to start to see this in the pricing probably at some point in March when you start looking at refinances. So you're going to want to close before that date, basically.
Kind of like when all the changes to second homes, they were increased, right? So everybody started getting priced 2 months before it went into effect type thing. Is that what you're saying?
Exactly. So, we've got some lenders that will wait till the last minute because our, process is so smooth that we can close early. But a lot of our other banks and a lot of the other banks out there, they'll put it in there 2 months early just to protect themselves.
Okay. Kind of a question for this. Isn't Fannie Mae and Freddie Mac the reason we got in so much trouble in 2008? Just wondering how to trust them with.
Yeah, they were a big part of it. That was the Wild West. So blame can be put on a lot of different people. But you had unsafe lending practices. So no doc loans, people that weren't really qualified, people that weren't occupying the home. There's just so much going on that it wasn't necessarily a direct effect from Fannie and Freddie, although they're the ones that were holding all the notes that went delinquent. So, and we can talk about that in a little bit. But yeah, they just make the rules. So I don't necessarily get to trust them or not trust them, but they do make the rules.
Yeah. Awesome. And kind of going through this too, I know you kind of want to touch on foreclosures and what's going on there with bank notes and bad debt.
Yeah. So big banks, pre-COVID, they were sitting on about $800 billion, that's billion with a B, in dollars in bad notes. And a lot of that was about to come to light. And then, COVID hit, and then that magical word forbearance came into play. So 1 out of every 2 delinquent note was given a forbearance, and it was all pushed under as a COVID forbearance. So whether they were directly affected by that or they just couldn't make their payment. And so a lot of that stuff is all coming due now on the forbearances. And that was the big question mark during that time, was how are lenders, the lending institutions, going to look at somebody in forbearance? And the numbers right now is 45% of those loans that got put into forbearance are now back to being delinquent or just about delinquent. So I think there's going to be, in the next 12 to 24 months, a pretty massive uptick in the number of notes that are being sold as delinquent.
Yeah, I know we talked quite a bit about this, Josh. We've made several videos, and we actually have a series on that. I kind of just want to touch on this, and then we can drive your point home, Josh, on what you want to talk about too. But they're saying kind of.
And Johnny Fly, we haven't forgot about you. We
Yeah.
just we only got a couple more minutes with Tom, and then we'll answer your question.
Definitely. It says here, foreclosure starts, which is when the first public foreclosure notice happens. They reach pre-pandemic levels nationwide, with lenders starting foreclosure process on over 23,000 properties in August 2022, up 12% from the month prior and up 187% from a year ago.
Mm-hmm.
So really what they're trying to say here is because of the pandemic and what happened, they weren't counting, or they weren't as many foreclosures because they weren't pushing it.
Well, and we had the forbearance, so people could get out
Correct.
of they didn't have to make their payments, that kind of.
So. And here's something you kind of want to touch on, Josh, as well.
Yeah. We have that. Yes. So I think this is all part of the same article. What's interesting here, so there's 2 things, one from the last slide, one from this one. It says, most importantly, over 90% of the borrowers in foreclosure have positive equity in their homes. And that's why we've seen that such a low foreclosure rate. But we've seen home prices decline here in the Treasure Valley and in a lot of states, a lot of cities across the U.S. And as these decline, the equity in those homes are going to shrink or even disappear or go negative, which is going to increase the foreclosure. Because if somebody is upside down in their house, then they're not really going to want to try to get out of there. They don't have the option of selling it and making money and getting out of it. So the foreclosure thing is, again, the housing market, you can't really sell with a click of a button, especially with Open Door and a lot of iBuyers getting out of the industry. The other thing is our foreclosures are up 186% year over year, which when you look at the actual numbers, it's not a huge number, right? The number of homes that are in foreclosure is not huge, but the thing that I want to bring up is it's increasing. And if it wasn't increasing, then there would be an argument saying, hey, we may not see more foreclosures coming to the market. But with increasing home values going down, I think we could see more foreclosures hit the market. What do you think, Tom?
Yeah. So back to that question of, is this the next 2008? Well, in 2008, 14% of every mortgage was delinquent. And that's a massive number. So over the last handful of years, we've been at about 2% of all mortgages have been in delinquency. Where they're saying it's going to go is probably 5, 6, maybe 7%. So that's we're doubling the amount of foreclosures out there. So again, that's, when you look at the number of houses out there, that's not a huge number, but when you're in the next 12 to 24 months, when you've got that much more bad paper out there, like that's a lot more than what's out there right now.
Okay. I have another question for you, Tom. Hopefully you have time to answer it. So I have a lot of people that call me and say, Josh, I want you to do a video on how many people are buying homes in adjustable rate mortgages in ARMs and the 2-1 buy down. Because, and again, what they're coming at is back in 2005, 2004, right. Even though there was no income it was like no income, just stated income loans. But there was a lot of adjustable rate mortgages. There was a lot of, where the interest rate was lower for a year, then it increased and it increased. And those people were the ones that got hit the hardest. And they keep asking me to do it. I'm like, I don't even know how to dig into that information right now. So just keep in mind, hopefully you can answer if you want to pass on, that's okay. But how many loans are you seeing right now, whether it's industry wide, whether it's your company that are doing adjustable rate mortgages or the rate buy downs?
Yeah. So for me, I've done 3 adjustable rate mortgages in the past year, and all 3 of them were investment properties. So it made sense because they were getting a 7.1, or technically a 7.6 adjustable rate, and their plan was they were selling it in 2 to 3 years.
Okay.
So it wasn't a big deal. Even company wide, we're not doing a lot of ARMs. It just, the benefit is not there in my opinion. The 2-1 buy downs. Now that's pretty cool, because things that people don't understand with the 2-1 buy down is typically someone else is paying for that 2-1 buy down. So that's that builder, that seller is giving you $10,000 in seller concessions. We're qualifying you on the rate that you're locking in today. So if the rate's 6%, you're qualifying on 6%. So you're aware what that payment's going to be. You're just getting 2 years to hope for interest rates to fall. So if it's a 6% rate today and it's a 2-1 buy down, well, that whole first year you're paying on 4%. And there's just a separate escrow account that's got the money for the rest of the 2% of interest rates. And then the next year, you're paying on 5%. So the goal there is, hey, rates are going to drop in the next year to, low 5%, that you're going to refi out of that. And the money that you've got left over in that escrow account for the extra 2-1, you can put that towards principal. So 2-1 buy downs, I'll take that all day long. That's safe, and that's going to save you money now rather than throwing it at an interest rate buy down.
And are you guys seeing a lot of like first time home buyers that are putting a half a percent down, or are you seeing more people coming to the table with 20% down, 10% down, 15% down?
There's an interesting dichotomy in buyers. When you're at that 325 and under, we'll do the Idaho housing down payment assistance where they're putting 5.5% down. Most of our deals are 5% and above. We've got a couple cool products for first time home buyers at 3% down, but the majority is 5% or about 5 to 20%.
Okay, cool. Jonathan, you got anything for?
Not right now. I just know you got to get going, Tom, and I want to say thanks for coming on there. If anybody does have a question for him, they can leave it in the comments. Tom, how can they get a hold of you if they need to talk to you further about what's going on?
Yeah, I mean, hopefully you could put my info in on the bottom, but Tom at Fulcrum Home Loans is my email address. My phone number is 208-996-6217. Text, call. I mean, I'm an entrepreneur, self-employed, so my phone's always on. And I'd be happy to come back and talk with you guys some more about this stuff. And I appreciate the opportunity to share this stuff with you guys.
Awesome. And guys, we will have his information in the description. So if you guys didn't get that pen and paper out fast enough and you don't want to rewind, it will be in the description below for you guys. So awesome, Tom. Well, hey, thanks for coming on. We are still going to keep on. We have a couple more slides to go on.
We'll get through pretty quick.
Tom, you can jump off whenever you want. We're going to keep rolling. If you can stay for a couple more minutes, you're welcome to. If not, it's okay. We can let you go. And we'll jump to Johnny Fly's question.
Yeah, take care. All
right.
Thank you, guys.
Yep.
I'll throw it up there. Again, back to Johnny Fly. Who's the best home builder around in the Boise area?
Yeah. Sorry it took us so long to get to this, Johnny, but that's a tough question because at the end of the day, there's a lot of these builders use the same subcontractors. So what it comes down to is the management of the build. And who is the best home? I don't know if I could say one is better than another. We have relationships with custom home builders that will just build custom homes, where you get to be a little bit more involved. And I think that allows you to kind of not necessarily micromanage, but get to see the build go a lot further. As far as the big builder, I think one of my favorite builders is probably Alturas. They make a really nice house. They're a higher end builder. So if you're looking for like a entry level builder, they're definitely not an entry level builder. But Alturas is definitely a nice home. I like them. I have some clients that have bought some Brighton homes that have appreciated it. The thing that they didn't like about the Brighton homes is just because almost all builders are giving you a warranty. Some are bigger, some are longer, some are shorter. The clients that bought Brighton homes, the things they didn't like about it is how long it took for their warranty work to get taken care of. So, but Brighton builds a nice home as well.
Yeah. Speaking about warranty work too, I will tell you one thing. A lot of people beat up on CBH, but from what I hear, their warranty work is actually pretty good, and they send people. They're very responsive about it. Maybe I'm wrong. I just people I talk to, but bring that up. But I think an easier question would be kind of budget wise, where they're at.
Yeah, look at that.
There it is. Look at that. Cool. My budget's around 700,000. Looking to buy 1 to 2 months. So might help you a little bit out there, Josh.
I think that will help. So yeah, Alturas falls in that category. You have And I think something to keep in mind, Johnny, is if you're going to buy in 1 to 2 months, also look at the builder's inventory. I don't know if you have an agent, that your agent can look up these things. If you don't have an agent, well, you're talking to two right here. Okay. I'm a broker. John's agent. So, but 700,000, depending on where you're wanting to be in this area. Look at the builders like Tricidio right now. They have a lot of inventory, and there's still stuff that they're trying to get finished. We've seen some of these other builders pull back, like James Clyde, Berkeley. Some of these builders are pulling back on what they're putting in the ground. And I think you can get, again, depending on where you're wanting in the valley, you could fit Alturas. You could get a Todd Campbell. You could get a Ted Mason. I don't think Vinte Homes has any in that price range right now. But Vinte is...
Well, Johnny, are you looking for
Yeah.
neighborhoods, or are you looking for like custom built, like on your own land? I mean, that could change it drastically too.
Yes,
You have custom builders,
because that depends on the land too.
or
'cause
stick built
if
homes.
you already own the land, that will change your cost.
Definitely.
But yeah, I think if I were to buy one of those from one of those builders, I'd probably choose Alturas or Ted Mason. He makes a nice house too.
Awesome. Cool. Well, let's get into the next slide. So,
And those of you who are just joining, if you guys could reach down and click that thumbs up, that would be really sweet for us.
yeah, I was kind of hoping to get these articles while Tom was still here.
Yeah.
But basically what I'm just kind of driving home is we understand what people are going through. I mean, they're saying banks brace for more consumers to fall behind on their loans. Delinquencies are up. And this is kind of like a driving point to the foreclosure that we were talking about. You know, credit card debt's insane. And personal loan balances grew 14% in the fourth quarter earlier from this year. I just think a lot of households are under pressure right now, and I think that's really driving the current market and what's going on. I think the market could be healthy, but it's just driven by politics and obviously the Fed rates and what's going on.
Yeah, absolutely. Let's finish this conversation with Johnny real quick. Sorry,
Yep.
he just posted up here something with a 3-car garage, maybe fifth wheel. Handful of builders are building with RV bays in the 700,000. Definitely in Canyon County, you could get something like that. It's going to be a little tougher to get something here in Ada County. But yeah, I would say my favorite still Alturas Homes. So feel free to reach out to us, Johnny, if you have any other questions. We're happy to answer those. And let's see. So jumping back to this, thanks, Jonathan. So we talked about this last week of like, if you don't think money is getting harder to be loaned out, just go to the bank and try to apply for a loan, right? Whether it be applying to buy an RV or that kind of stuff, they are getting a little bit more strict. I mean, I was talking to a buddy. He works in the finance industry, the car finance industry to be exact. And he was saying that people with an 800 credit score are getting like a 6-7% car loan. And I'm like, money is not cheap anymore. Right. And when money's not cheap, even people who have great credit scores, I mean, I don't know what somebody who has bad credit score, what kind of interest rate they would get. So we're definitely feeling the pressure of
well, then kind of bring up this article here. And really, these are structured around, like, I have an understanding for people who would like to purchase, but the current market's just crushing their ability to. I mean, this article just came out today saying that millions of Americans earning 100,000 are living paycheck to paycheck. I mean, that might be bad budgeting, but I think it's due to, inflation, cost of living, and just the all-out cost to just live currently is just insane here. I mean, this is nationwide. Obviously, you know, Idaho might be a little different, but it's just, that's the reason I put this up there is because so many people post about how good everything is and buy. But I think a lot of people are actually, you know, not in a position to do that currently.
Yeah, I mean, I don't want to overlook the people who can, like Johnny Fly. We have a handful of clients that are, but there are a lot of people that are struggling. We don't want to overlook that. People who are, stuck paycheck to paycheck, which makes it harder. Again, that's bringing the demand down. When people aren't having to live paycheck to paycheck, and people feel wealthy, then more people are wanting to do major purchases, like buying a house. And I think that's something that is, I think that's just a sign of what the whole economy, right? The housing economy is just one section of the whole economy, and that's just it's just telling,
Yeah, and I'll just kind of wrap up. I thought this was interesting right here. If you look at the income from 2000 to current, and then the new home prices in 2000 to now, I mean, it's such a massive increase. And what you're seeing is income is not, I mean, this is not for everybody, but I mean, if you're a common, first time home buyer, people trying to buy their second property, I mean, it's tough. And you can see income's not going up and home prices and everything else that you try and do is.
Yeah.
But
yeah, that's the struggle. The struggle is real. I mean, median household income here in Treasure Valley is about 70,000, right?
Mhm.
And
No, obviously this is nationwide.
this is nationwide,
But-
but yeah, it's hard.
Yeah. Another question. Yeah, I'm just waiting on my treasury bills to mature, then buying.
Yeah, you and a couple of
of people.
our other clients are doing the same thing. So waiting to, but it's hard to sell your treasury bills when they're making such great return. So I understand that.
Yeah. And that wraps that up, Josh.
That wraps up. All right, guys. Well, we appreciate everybody tuning in. Again, leave your questions. We'll get back to them. If you have any questions, feel free to reach out to us. Our phone is on and we answer questions. Sometimes we are limited. If you're working with another agent, sign up with another agent. We are limited to what we can help you and talk to you about. But we always try to do the best of our ability. If you don't have an agent and you want an agent, well, we are them. And if you need one or want to be referred to one, we can do that as well. And lastly, make sure you tune in next week. Every Thursday night, we're going to actually bump this back to 6 o'clock starting next week. Is that right, John?
Yeah, I'm going to try to.
So we're going to try to bump this back starting at 6 o'clock and every Thursday. So hopefully if you are seeing this after live stream, we'll see you on the next one.
Yeah. And just before we go, leave your comment below. I mean, we answer them. Usually these videos get a couple thousand views after we end it, and we try and keep up with the comments there and continue the conversation. And if not, we'll see you next week. I
All right,
appreciate
guys.
being here. Thank
See
you.
ya.